Financial situation in the world, and why now is the perfect time to invest. The government's tax-cutting initiatives have been criticized by the International Monetary Fund, IMF, which has warned that they could exacerbate the problem caused by rising living costs. Due to worries about growing inflation and the possibility of a recession, stock markets around the world are in upheaval. So, is it a poor idea to acquire shares right now? Or are there possibilities when other people are afraid? Before moving on any further, please know that this video is not meant as financial advice and is for educational purposes only. Talk to a financial advisor before making any investments. There are now 4 major trends that have an impact on the economy and stock market, and the uncertainty around each is difficult for investors, market analysts, and investment strategists. Inflation, the Federal Reserve's interest rate policy, the strength of the US dollar, and Russia's invasion of Ukraine are all of these high-level trends. The macroeconomic climate is currently unpredictable, according to Anastasia Amoroso, Managing Director and Chief Investment Strategist at A Capital Network. She said, "We've been working on this for 9 months, but other than the fact that inflation is continuing longer than anticipated, what have we truly learned?" To combat persistently high inflation, the Federal Reserve has gradually increased borrowing prices since March of this year. The federal funds rate, the benchmark interest rate used to measure how quickly and significantly the U.S. central bank will raise it to achieve its objective, has been adjusted. The biggest obstacle this year, in terms of stock market price volatility, has been the shifting target. The conflict in Ukraine has also affected worldwide prices for food, energy, and other commodities. Additionally, the US dollar is currently trading at its highest level in decades in comparison to currencies like the euro and the pound sterling. In many ways, that power can act as a barrier. A high dollar can have a detrimental effect on the earnings of companies in the S&P 500 index because around 45% of their income comes from sources outside of the United States. While the cost of imported items may decrease, the cost of American exports to foreign countries increases. The Federal Reserve is working to accomplish a soft landing, whereby increasing borrowing rates slow the economy and moderate rapidly growing consumer prices without causing a recession or excessive unemployment. The difficulties of that goal have been acknowledged by Fed officials on several occasions, but Amoroso thinks the central bank is close to accomplishing it. Even though it is slowing, the US GDP isn't going off the cliff. The decline in energy prices should eventually result in a decline in food prices. Prices for food include a portion of the energy required for transportation. Additionally, customers are beginning to complain to businesses about rising food, travel, and other costs. Companies are finding it more and more difficult to defend pricing rises. As investors anticipate better times, the stock market frequently starts to reflect an economic rebound before economic data reach a bottom. That occurred, for instance, while the epidemic was in full swing. On March 23rd, the stock market reached its lowest point before quickly recovering. The message for investors concerned about a recession is to buy assets that perform well in the early phases of an economic recovery in order to be ahead of the curve. Value stocks, small-cap companies, and industry groups including the energy, industrial, and financial sectors are some of these. Generally speaking, buy when it hurts to do so. Is it a good time to invest? Some investors, particularly younger ones just dipping their toes into saving money for the long term, have found the recent turbulent price activity in the stock market to be unsettling. However, according to financial experts, this is a fantastic time for people to begin investing or to keep putting money into equities. Because many of our younger clients and investors have never experienced this before, they are terrified and unsure of what to do. Ann Tran, a certified financial planner and managing partner at Orange, said that now is the moment to capitalize on the market's turbulence and keep investing. The current market collapse also presents a chance for young investors who have the greatest time horizons to plan for retirement. The podcast's host, Paula Pant, said, "Your very best friend is a dip. Buy on the downturn. Take advantage of the low costs today and avoid trying to time the market." The biggest slumps in the stock market typically come after the strongest ones, so if you keep investing even while prices are falling, you're positioning yourself for significant gains in the future. That can position you for long-term success, regardless of how close you are to retirement. We can certainly look at the stock market to see if there are any trends that can help us decide whether now is a good time to invest, even though we have no idea what the future will bring. Some seasoned investors would argue that buying when stock markets are low is a smart idea. The theory behind this is that you get greater value for your money and that the value of your investments will increase when the markets recover. Large corporations are expanding and also seem to be navigating the current issue in the cost of living very successfully. Therefore, assuming growth persists, this would be a fantastic moment to buy stock. However, once more, there is no way to predict how a company will fare in the years to come or whether its growth trajectory will continue. Some people may disagree and believe that timing the stock market is a bad idea. Investing for the long run is the best strategy for generating a profit. This offers your investment a chance to weather the ups and downs of the stock market with the goal of eventually selling for a profit. Is the energy crisis a good time to invest? The energy crisis began to affect businesses in late 2021, driving rising expenses and eroding profit margins. Although many businesses have raised their pricing, they are still struggling with the issue of customers having less money to spend. Due to lower consumer confidence, some industries are more vulnerable to the energy crisis than others. As a result, the share prices of businesses operating in these industries may have decreased in 2022. Commodities firms like miners and oil and gas producers could emerge as winners from the energy crisis. Since the beginning of 2022, shares of Shell have increased by 33%, while those of BP and the mining group Glencore have both increased by 24%. Of course, their current performance is not a reliable predictor of the stock's future performance. Is this the right time to invest in shares of businesses that are currently experiencing the effects of the energy crisis in the hopes that those shares will rise once the crisis has subsided? Or, in the event that the energy crisis persists for some time to come, is it a good time to invest in mining and oil companies? Unfortunately, there is no way of knowing for sure, but following a similar trend can make our decision a lot easier. 4 tips for investing during uncertain times. The following are our top 4 guidelines for investing amid a financial crisis. Remain composed. While the conflict in Ukraine and the rising cost of living have stoked many emotions, keep your investments in perspective. Think about your objectives. Investing is a personal decision. Your decisions are influenced by your circumstances, goals, needs, and level of risk tolerance. Take advantage of tax reduction by investing in an ISA tax-free. A pension and a lifetime ISA can potentially give you a boost right away because the government will put more money in them each time you contribute more. Drip feed your money in the hopes that it will grow over time. If the markets decline further, you are purchasing at a lower price, which could smooth out your returns. Analysts claim that investors are giving higher priority to businesses who have demonstrated resilience in the face of declining consumer spending. Investors are also purchasing dividend-paying businesses with a proven track record. Without putting your money at risk, investing is impossible. This is due to the fact that investing requires some level of risk in order to reap rewards. The potential for profits increases with risk, but there is also a larger chance that your investment will lose value. However, there are techniques to lessen the amount of danger you are willing to assume. This comprises investing in less volatile assets like bonds as opposed to shares. Ensure that you diversify your investments across different asset classes, businesses, industries, and nations, so that in the event that one investment underperforms, presumably others will do well. You may choose a conservative risk level if you have a pre-made portfolio. That's all for today. Hope this information helps you in making an informed decision about investing. Please subscribe to our channel and hit the bell icon if you want to get information like this. We will see you in our next video. Thanks for watching.